Something urgent is brewing in the world of crypto. This week, the markets stand on a razor's edge. Bitcoin, Ethereum, and the entire digital asset space are trembling, waiting for a shockwave of economic data that could either ignite explosive rallies or trigger brutal crashes. Mark your calendar, September 9 through 12. On September 9 comes the non-farm payrolls annual revision. September 10 delivers the producer price index and core PPI. Then come the all-important inflation readings, both monthly and yearly. And finally, the Michigan Consumer Sentiment Preliminary. Each one has the power to decide the next big move in global markets and in crypto. The non-farm payrolls annual revision, a recalibration of US job gains. These numbers are never done. This year, revisions have been historic. Earlier, May and June job numbers were sliced by 258,000. The largest correction since 1979. June was cut from plus 14,000 to negative 13,000. July adjusted from 73,000 to plus 79,000. And just recently, August tuned the market with only 22,000 jobs, far below the expected 75,000, while unemployment climbed to 4.3%, the highest in nearly 4 years. Downward revision shattered confidence in the labor market. Traders are now pricing in possible Federal Reserve rate cuts, pushing bond yields down, weakening the dollar, and sending stocks into volatility. For crypto, a weaker labor market can drive investors into Bitcoin as a hedge, or trigger fear-driven sell-offs. Next, on September 10 comes the producer price index. This is the earliest signal of inflation pressure building at the wholesale level. In July, both PPI and core PPI shocked at plus 0.9% when forecasts were only plus 0.2%. The result? Market cracked, and Bitcoin plunged nearly 4% within hours. Hot PPI readings ignite fears of more rate hikes. Risk assets get crushed, and crypto, the most volatile of them all, takes the hardest hit when inflation refuses to cool. Then come the monthly and yearly inflation numbers, headline and core. This will tell the deeper story of price momentum across the economy. If inflation comes in hotter than expected, markets brace for hawkish Fed policy, tightening liquidity and pressuring crypto. But if inflation cools, hope of easing could trigger a wave of optimism and ignite a crypto rally in seconds. And finally, the Michigan Consumer Sentiment Preliminary. This is the emotional heartbeat of the American consumer. In August, sentiment dropped to 58.2, below expectations and sharply lower than the previous 61.7. Short-term inflation expectations even ticked higher, to nearly 5%. When consumers lose confidence, spending slows, growth expectations weaken, and the Fed feels new pressure to act. For crypto, that means heightened volatility, sudden rallies on dovish hopes, or painful crashes on fear of slowdown. So here's the picture of the week ahead. Job revisions that could expose hidden weakness. PPI shocks that scream inflation, core inflation readings that decide the Fed's path, and consumer sentiment that whispers the public fear. Crypto lives and breathes through these numbers. Each data release is a spark, able to unleash panic selling or ignite wild rallies. Stay locked in, because this is not just data. This is the pulse of the economy and the lifeblood of your portfolio. Don't blink, or you may miss the moment markets break.